First up, we've got a massive story coming out of Latin America, where Mercado Bitcoin, the region's biggest digital asset platform, has just made history by listing World Liberty Financial, a cryptocurrency project directly tied to the Trump family. This isn't just another meme coin. It's a fully fledged DeFi ecosystem with a governance token and a stablecoin, aiming to merge decentralized finance with a powerful political brand. We're talking billions in trading volume within 24 hours, making it one of the hottest digital assets of the week. But what does this political endorsement mean for the future of crypto? Let's unpack it. Next, we're shifting gears to the king of crypto itself, Bitcoin, with a crucial price prediction. While some are eyeing a Q4 moonshot, analyst Plancy is cautioning that these peaks aren't guaranteed. We'll break down the key levels to watch, the impact of U.S. labor data and potential Fed rate cuts, and whether now is the time to rotate into altcoins showing strength. Get ready to understand the charts like never before. And speaking of the Fed, our third story dives deep into a nightmare scenario unfolding for them: stagflation. We'll explore how this economic conundrum, with high inflation and slowing growth, is impacting Bitcoin's price and what it means for the upcoming Fed interest rate decision. Will a rate cut be enough, or are we heading for a sell the news event? We've got the analysis you need. Finally, we're heading south to El Salvador, the nation that boldly adopted Bitcoin as legal tender. We'll uncover the real lessons learned from their groundbreaking strategy, from financial inclusion for the unbanked and navigating regulatory hurdles with the IMF, to the practical realities of price volatility and their intriguing dual strategy of holding both Bitcoin and gold. What can the rest of the world learn from El Salvador's bold experiment? Stick around to find out and make sure you're subscribed and have that notification bell on. Political power meets digital assets. Trump coin lands on Mercado Bitcoin. Get ready, because the world of finance and politics just collided in a spectacular way. Mercado Bitcoin, the undisputed titan of digital assets in Latin America, has just etched its name in history by becoming the first exchange in the region to list World Liberty Financial, a cryptocurrency project with direct ties to the Trump family. This isn't your average speculative token. WLFI is built on a modified version of OV, the leading decentralized lending system, offering not just a governance token, but also its own stablecoin, USD1, aiming to create a comprehensive ecosystem for lending and trading that merges decentralized finance with a high-profile political brand. Launched officially on spot exchanges on September 1st after a quiet debut in the futures market, WLFI saw its trading volumes explode into the billions within just 24 hours, catapulting it into the ranks of the week's most active digital assets. Its appeal is a potent mix of novelty and notoriety, carrying the unique imprimatur of a presidential family, a stark contrast to anonymous crypto developers. For many, WLFI represents more than just an investment. It's a statement of allegiance, while for traders, it's a volatile opportunity. The protocol functions much like other DeFi systems, allowing users to pledge crypto as collateral, borrow against it, and trade the USD1 stablecoin. WLFI holders gain governance rights, influencing parameters like collateral and interest rates, theoretically fostering a community-driven protocol, but also providing a unique avenue for politically motivated investors. Mercado Bitcoin, with its millions of users across Latin America, is positioning this listing as a gateway to global digital finance. However, this bold move isn't without its questions. Political branding in crypto is a double-edged sword, capable of generating immense interest, but also risking entanglement with partisan politics and intense regulatory scrutiny, especially from U.S. watchdogs already wary of stablecoins and DeFi. The expected price volatility, fueled by pre-announced launches and heavy retail participation, will undoubtedly attract speculative traders. Ultimately, the success of WLFI hinges on its ability to develop into a functional lending ecosystem beyond the hype, stabilize its USD1 stablecoin, gain adoption for its lending services, and withstand potential regulatory pushback. For now, its listing on Latin America's largest crypto exchange provides the market with exactly what it craves: a compelling new narrative to trade on. This story is just the beginning of a wild ride in the crypto markets. Don't go anywhere, because we're about to dive into whether Bitcoin itself is heading for a massive Q4 rally or a sharp pullback. Bitcoin's Q4 rally, guaranteed or gamble, decoding the charts. As of September 9, 2025, Bitcoin is hovering around the $111,000 mark, buoyed by softer U.S. labor data that eased Treasury yields and pressured the dollar, conditions typically favorable for risk assets. However, as analyst Plancy has cautioned, a Q4 peak is far from a certainty. Seasonality across different cycles shows mixed results, meaning the calendar alone isn't a reliable trading signal. The real key lies in confirmation from the charts. For the bulls to maintain their upward momentum, they need to defend the critical $110,000 to $112,000 demand zone, and then decisively reclaim the $117,000 to $118,000 level on increasing volume. Should this happen, the path higher remains open. Conversely, a decisive daily close below this crucial demand zone would shift the probabilities towards increased choppiness or a more significant pullback. In such a scenario, astute investors might consider rotating capital into altcoin setups that exhibit fresh breakouts, strong relative strength, and clearer risk-reward profiles. The latest U.S. jobs report, showing slower hiring, a rising unemployment rate, and downward revisions to previous data, has indeed nudged yields lower and weakened the dollar index, increasing the likelihood of a rate cut. Historically, a more dovish Federal Reserve aids Bitcoin by weakening the dollar and reducing borrowing costs, providing a cushion against downside pressure even if Q4 sentiment cools. While a dovish Fed can stabilize BTC, patience and waiting for chart confirmation are paramount before assuming a purely bullish outcome. Currently, BTC is consolidating within that vital $110,000-$112,000 demand zone. Repeated lower timeframe rejections hint at dip buying interest, but overall momentum remains muted. The critical levels to watch are clear. Sustain a daily close within or above $110,000-$112,000, followed by a break and hold above $118,000-$118,000 on rising volume. This would target a retest of $117,000-$118,000 with potential for further upside if momentum expands. The risk scenario involves a clean daily close below $110,000, opening the door to potential declines towards $108,000-$106,000, and possibly a liquidity sweep down to $103,000-$101,000. This pivotal battleground presents a tactical re-entry area for medium-term longs, but waiting for confirmation is far wiser than attempting to catch a falling knife. When Bitcoin consolidates, diversifying into altcoins with strong utility, clear catalysts like upcoming launches or upgrades, and demonstrable momentum can enhance risk-reward. For instance, Pepito, PEPTO, is being eyed for its staking rewards of around 23% APY, and a presale that has reportedly raised over $6.6 million. Bitcoin's price action is heavily influenced by macroeconomic forces, and the Federal Reserve is facing a truly daunting economic challenge. Next, we'll explore the nightmare scenario of stagflation and what it means for Bitcoin and the Fed's next move. Fed's stagflation nightmare: will Bitcoin thrive or dive? Bitcoin's price has been holding steady around the critical $112,000 resistance level as investors brace for the upcoming August inflation report. This report is widely anticipated to confirm the Federal Reserve's worst-case economic scenario: stagflation. This phenomenon, characterized by high inflation coupled with slowing economic growth, presents a particularly challenging dilemma for policymakers. Bitcoin currently sits about 9.85% below its year-to-date high of $124,200, having recovered from a low of $107,270. The U.S. economy is showing concerning signs of weakness in its labor market, with the unemployment rate ticking up to 4.3%, the highest since the pandemic began. August saw a meager addition of just 22,000 jobs, following the first monthly job losses recorded in June. This backdrop of a cooling economy makes the impending inflation data even more critical. Analysts project that the headline Consumer Price Index, CPI, will rise from 2.7% in July to 3% in August, with core inflation potentially reaching 3.2%, figures that would solidify the stagflationary outlook and put immense pressure on the Fed. Stagflation is the Fed's ultimate nightmare because traditional policy tools become less effective. Cutting interest rates to stimulate the economy and labor market risks exacerbating inflation, while hiking rates to combat inflation could further stifle economic growth and worsen unemployment. The central bank faces a difficult choice: prioritize tackling inflation or supporting employment. Market expectations, reflected in polymarket odds nearing 100%, suggest the Fed will opt to cut interest rates in September, primarily to safeguard the labor market. Historically, Bitcoin has shown a tendency to perform well during periods of Fed rate cuts, notably during the pandemic when rates were slashed to near zero and quantitative easing was implemented. However, a significant risk looms: the possibility that a September rate cut has already been priced into the market. J.P. Morgan analysts have warned about similar sell the news scenarios in the stock market, and Bitcoin could face a similar fate, with its price declining after the anticipated announcement. On the technical front, the daily BTC chart reveals pressure over the past few weeks, with the price retreating from its August high. A double-top pattern has formed around $123,027, with a neckline at the current $112,000 level. Having moved below the 50-day exponential moving average and the 23.6% Fibonacci retracement level, Bitcoin has retested this crucial $112,000 neckline. A failure to hold this level could signal a resumption of the downward trend, potentially leading to a drop towards the next key support at $105,000, corresponding to the 38.2% Fibonacci retracement level. While the global economy faces uncertainty, one nation has been boldly experimenting with Bitcoin as a national strategy. Next, we'll explore the valuable lessons El Salvador is teaching the world about crypto adoption. El Salvador's Bitcoin bet: global lessons in crypto adoption. El Salvador continues to make bold moves on the global stage, standing as the first nation to adopt Bitcoin as legal tender, a decision that has significantly challenged traditional banking systems. Their pioneering experience offers a wealth of insights for countries worldwide considering similar paths toward digital asset integration. One of El Salvador's primary objectives has been to extend financial services to its unbanked population, a significant portion of whom lack access to traditional banking. By embracing cryptocurrency, the government aims to empower small and medium-sized enterprises, SMEs, to reach a broader customer base, a model that could resonate with many European and Asian nations grappling with similar financial inclusion challenges. The nation's journey also provides crucial lessons in regulation. Initially mandating Bitcoin acceptance, El Salvador later shifted to an optional approach, influenced by guidance from the International Monetary Fund, IMF. This highlights the critical need for clear, consistent communication between regulators and businesses, ensuring that startups are not left in the dark regarding digital asset frameworks. However, El Salvador's experience also underscores the reality of price volatility. While official data indicated that 82% of small businesses accepted Bitcoin by 2025, actual usage, particularly for remittances via the state wallet, remained low at just 1%. This suggests that widespread adoption requires not only infrastructure, but also user readiness and potentially a greater reliance on stablecoins until the general public becomes more comfortable with volatile assets. Intriguingly, El Salvador is pursuing a dual-asset strategy, recently investing $50 million in gold. This move suggests a pragmatic approach to hedging against dollar devaluation and inflation, demonstrating that a complete pivot to Bitcoin is not the only option and offering a potential blueprint for other nations seeking to diversify their reserves. Furthermore, as crypto payroll gains traction globally, El Salvador's insights into facilitating such payments could prove invaluable for SMEs worldwide. Navigating the nuances of crypto payroll, especially considering differences between US and Latin American markets, offers practical guidance for broader adoption. El Salvador's Bitcoin strategy is undeniably ambitious, challenging conventional financial thinking. Their experience offers a crucial learning opportunity, illuminating both the opportunities and risks inherent in digital assets. By studying their tactics in financial inclusion, regulatory navigation, and asset diversification, other nations can chart a more informed course toward embracing the digital future. That wraps up our deep dives into the biggest stories shaping the crypto world. But before you go, we've got a lightning round recap of all today's top headlines. All right, Bitcoin Bulletin fam, that's a wrap on today's explosive news. We saw Mercado Bitcoin make history by listing the Trump-associated World Liberty Financial, potentially blurring the lines between politics and DeFi. We dove deep into Bitcoin's price action, analyzing whether a Q4 rally is on the horizon or if we need to brace for a pullback amidst Fed uncertainty. We explored the Fed's stagflation nightmare and its implications for Bitcoin's future. And finally, we learned invaluable lessons from El Salvador's bold Bitcoin adoption strategy, from financial inclusion to regulatory hurdles. Don't forget to smash that like button if you found this valuable, subscribe for more cutting-edge crypto insights, hit that notification bell so you're always in the know, drop a comment below with your thoughts on these stories, and follow us on all social media platforms for real-time updates. We'll see you in the next one.